Hi, it's Dr. Meherji. Welcome to my today's session, that is types of accounts. Basically, account is a systematic record of all the transactions related to a particular item. All the transactions relating to a particular item. In accounting, there are several types of accounts based on their nature. But broadly, there are three types of accounts. There, as you all knows, personal account, real account, and nominal account. Based on these three accounts, different sub accounts may be created based on the requirements of the firm. Let us see that traditional golden rules classification. Golden rules of accounts, they are widely popular. Golden rules of accounts. Immediately one should get in his mind, that is personal account, real account, and nominal account. These three accounts are having a set of rules, and personal account, that definition is accounts of people or organizations. It is mostly popularized as a names account. This golden rule is debit the receiver and credit the giver. Debit the receiver and credit the giver. Example here is given different names: Ram account, Shyam account, capital account, like that. And I will tell you a personal and a thumb rule, that is that last account, third account, what I said, capital account. Many might have a doubt why it falls under personal account. You said it is names account, Ram, Shyam, Khanna, Jain, like that. So when we say capital account, whose capital it is? Whose capital it is? Again, we may say some other person's name. So that is why it is falling under personal account. Capital account is falling under the personal account, and the personal account rule will apply. Debit the receiver and credit the giver. And when it comes to real account, it is most popularized as assets account. Assets account. Whether they are tangible or intangible. Whether it is tangible or intangible. What is meant by tangible? Plant, land, building, etc. are tangible. We can see them. We can see and we can touch. So it is tangible assets. And there are some intangible assets also there. What are they? Copyrights, patents, etc. Goodwill. So these are intangible assets. And here this rule is debit what comes in and credit what goes out. Example, I have given cash account, furniture account, and patents account, like this. Patents, copyrights, goodwill, all the intangible assets. And in traditional golden rule, last but not least, that is nominal account. It was popularly known as expense or income account. Expense or income account. So this rule is debit all expenses and losses and credit all incomes and gains. You don't confuse. So for instance, many may say it is expense account. Nominal account means it is an expense account. Okay. If it is expense to me, the same may be income to someone else. If it is income to me, it is expense to someone else. So that is why it is incomes and expense account, that nominal account. What is the rule of nominal account? Debit all expenses and losses. If in your hands it is loss or expense, you have to debit it. If it is profit or gain in your hand, you have to credit it. You don't think while writing entries, you don't think on that other side. You think on your side only, whether it is income to you or whether it is expense to you, like that. Not thinking on other side. Based on that, you can write entries. Then one can make correct and good entries. It is the traditional golden rules classification: personal account, real account, nominal account. All accounts will fall under these three categories. And now we will see the modern accounting equation classification. The modern accounting equation classification. Okay, accounting equation method. The accounts are classified mainly into assets account, liabilities account, equity or capital account, revenue account, and the expense account. We will see one by one. With the rules. Assets, these are resources owned by the business. Either it may be cash or inventory or equipment or accounts receivable. While in business, we are selling goods not only in cash. We will offer credit also. That other party will come to us and he will take goods what we are dealing with. He will take it and he will promise within few days he can repay that amount. So that is accounts receivable. That is also equivalent to cash. Okay, in a near term, we can convert them into cash. They will come and pay to us. And liabilities, obligations owed to others. So while carrying business, we will take loans or we have to pay something to some other parties. Like earlier, in case of accounts receivable, someone else took goods from us and he promised to pay in few days. Like that, here in this case, we took goods from a big supplier and we promised him within 15 days or 30 days we will pay the cash. Those are called accounts payable. And accrued expenses. So expenses that are accrued, not yet paid, that is also fall under this liabilities category. And the third category of assets are equities. Equity. Warner's claim in the business. How much Warner is contributed for his business, that is called equity or capital. In small trader or sole traders, they will bring the capital not only in the form of cash but also goods, furniture, like that also. So that surplus laid on at their home, they will bring to the business. So that also his contribution to the business we will consider their value also for with the equity. Total value, cash, and the values of whatever he brought down to the business, the goods or the furniture, etc., etc. Also, we will calculate, and that summation is called capital. And the retained earnings. Okay, after doing this business, after some time period, maybe accounting period, 1 year, okay, they might get some profits. That profits they may not withdrawn, they're not taken away, and they may keep it in the business. In that case, that are called retained earnings. And in case of drawings means the owners or the proprietors, whoever took away the cash or goods for their personal usage, that would be called as drawings. These three also fall under equity account classification. What are they? Account. So the fall in this category are capital, retained earnings, and third one is drawings. And now fourth account is revenue accounts. What is meant by revenue? While carrying out of your business, how much or how you are generating income, that is called revenues. That revenues mostly, in case of trading firms, it is sales revenue, and in case it is not sales, sir, it is a service providing firm. In that case, it is service income. We will charge some fee for providing that services. Best example, okay, in case of big, okay, auditors, lawyers, advocates, they will charge some fee from their customers for providing their valuable services, advisory services. And interest earned. Okay, that business cashes maybe some times maybe lay down in a bank, or maybe sometimes that we may keep it in uh, term deposit, that will attract more interest than the savings interest. So all that interest income, that would be called as revenues. And the last one is expense account. In this, costs incurred to earn revenue. Okay, we cannot earn income simply. So to earn that income, we have to make some expenses. That expenses are categorized under this account. Costs incurred to earn revenue, that are we have to pay office rent or go down rent, etc., and utilities, electricity, water, etc., that were charges, and we have to pay salaries to our employees, and whatever assets we are using for the development of or running the business, that are subject to depreciate over a period of time. That depreciation also they charge to this expense account. Thereby we can sum up under this modern uh, classification or accounting equation method. The assets are classified into assets, liabilities, equity, revenue, and uh, expenses. I hope you all understood the concept of types of accounts. Thank you one and all for spending your valuable time with me. Come and join more useful information through my channel. Thank you.